My portfolio's down almost $10,000 this week. I don't know if you are invested or not, but if you are in the market in any way, in any sector, your portfolio has probably gotten beaten down. If you follow this channel and you're a growth investor, then you've gotten destroyed right alongside me. And this is a sad time. This is a sad time for investors. And I have a really sad lesson that I want to share with everybody. And I'll get to that in just a second. If you haven't watched this channel before, I am building a portfolio publicly right here on YouTube. I'm trying to grow it from $10,000 to $1 million over the next 10 years. And things aren't quite going my way, so I'm not sure if that's going to happen or not. I'm actually still confident that it will with a long enough time horizon and adding enough money. Little secret there, the way you grow a portfolio is to keep adding money as well as the stocks go up. So that's part of long-term investing. But here we are. We have put in total, $92,944. We are now at $88,176. So we are down almost $5,000 in total since February 15th, 2022, when the portfolio started. Just this week, again, we are down $9,300. Here's a look at the worst performing stocks this week. MongoDB down 30%, Gitlab down 25%. I own both of these. Snowflake down 13%, Crowdstrike down 11%, and the list goes on. Everything in the portfolio, except for Bill.com, which I just added. I sent an email out to my email newsletter subscribers, austin.substack.com. There's a link in the description below, letting them know before I bought Bill. Rocket Lab was up too, and then Airbnb was up as well, but not enough to make any difference in the portfolio. Okay, those are my companies. I don't recommend anybody just blindly follow me or anyone else, but I like to be transparent and share the ups and the downs, okay? So here is the sad lesson for investors, and the lesson that I want people to learn and know, and also to reinforce for myself right now, because this doesn't feel good. This isn't fun for anybody, right? The sad lesson is that when we get to this point, this is where you want to stop investing. This is where you want to stop adding money to your portfolio. This is where you want to sell everything and get out of the market and sit on the sidelines. I feel that pull, but I'm not going to do it, because that's our human nature. But in my opinion, and this is what I'm doing with my own money, that is exactly the opposite of what we should be doing after the market is down as much as it is right now. These are the times that we want to hold or buy if we can. And these are going to be great opportunities, I truly believe, which is why I'm buying companies almost every single week. These are the opportunities to build portfolios and buy into companies at great valuations that we're going to look back in 3 and 5 years and be like, wow, that hurt buying. The stock went down another 20% after I bought. But looking back, I'm thankful that I did that. Now, there's a couple things with that, right? I look at investing as long-term. So I am not investing money that I plan to need in the next 3 to 5 years. This is completely separate from any bank accounts, checking accounts, emergency fund. We have that stuff. We have that stuff outside of the markets. Okay, that is my requirement as to even begin investing. Because I have a family, because I have a wife, I have kids, I help provide for them. We need a level of security, and everybody's level of security is different. When I was younger, and my wife and I both worked, we didn't have any kids, I pretty much needed zero emergency fund because we had very low liabilities, no student debt, and both had very secure jobs. So almost all my money and savings were in the market at that point. I didn't have any kids, no mortgage, no nothing. But now that we've taken on more responsibilities, we have upped our emergency fund and upped our personal savings so that I can invest and I can have volatility in my portfolio. So I got that out there. Everybody's different. I'm not a financial advisor. This is not finance recommendations for anybody. I'm sharing my perspective and why I'm okay with my portfolio going down like it is and why I plan to keep adding over time. Okay, so this is a chart of the NASDAQ and the S&P 500 essentially since 1999, right? And it shows the normalized change. The NASDAQ, the QQQ, is up 478% since 1999. The S&P 500 is up 205%. If we put that in dollar terms, that means a $10,000 investment in the QQQ or the NASDAQ is worth $57,000 today, over 20 years basically, 22 years. Same thing in the S&P 500 is worth $31,000 today. But let's look what happened along the way. This shows percent off highs. So the lower these go here, the worse and further it is off of its high. So this goes all the way back to, for the S&P 500, it goes all the way back to 1950. This right here is a 30% drop, this line that you're looking at. The S&P 500 has dropped 30% or more, 1, 2, 3, 4, 5, 6 times. It has dropped 30% or more 6 times since 1950. But over that same time frame, and if we take out the QQQ, over that same time frame since 1950, even with those 30% drops, the S&P 500 is up 23,450%, turning $10,000 into $2.35 million. And so now let's just do kind of the same exercise with a few individual stocks here, right? So Apple has done amazing, but look how many times it's been down 60% or more. There's at least 4 or 5 times really since 1981 that Apple has been down 50% plus, right? Over that same time period, $10,000 has turned into $12 million. Microsoft, all of these have had 50% plus drops. Again, $10,000 from 1986 to now is worth $26 million. Amazon, from 1997 to now, $10,000, worth $13 million. Alphabet, from 2004 to now, $10,000, worth $429,000. And again, let's just look at Alphabet. Look how many times it's been down more than 25%, okay? TransDigm, just showing you that it's not just these massive companies, the biggest companies in the world, that have done really well. TransDigm is pretty much an airplane parts manufacturer and distributor. Since 2006, a $10,000 investment has turned into $250,000. It has been 25% off of its highs 4 to 5 times over that time period. This happens with every single stock that's a major winner, and the markets. They sell off. We go down 20% sometimes. We go down 30% sometimes, market wide. And then individual stocks can go down 50, 60, 70. So NVIDIA as well has been down, 40% plus, 7 or 8 times since 1999. $10,000 turned into $3 million over that time period, okay? And so right now, if we take a look, just look at these numbers up here. Apple is 14% off of its all-time high. Microsoft is 25%. Amazon is 31%. Alphabet is 28%. TransDigm is 12% off its all-time high. And NVIDIA is 60% off its all-time highs. So we are in the midst of one of these bad sell-offs in these companies, right? And I'm not calling a bottom. I don't know when this is going to stop. But what I do know is that when I invest, if I could remove the stock price and not get emotional and react to that, what I want to see is a company that is increasing earnings, is growing revenue. And so if we take a look at the sales for Amazon, the sales per share, they have grown from 52 cents per share in 2002 to $45.61 a share in 2021. Google has grown sales. Again, we are looking at sales. We've taken the stock price out. We want to see businesses improving over time. Sales have grown from 29 cents a share in 2004 to $19 a share in fiscal year 2021. Sales growth has averaged 29% per year. Microsoft, same thing. Sales growth has averaged 12% per year since 2002. NVIDIA's sales growth rate since 2002 has grown 14% per year. TransDigm has grown 15% per year. And so what I'm saying is that these businesses, even when the stock turns down and the stocks underperform. And so now let's look at the stock price along the way. We can see stock price is extremely volatile. Same thing for Amazon. You can see the revenue just kind of growing up and to the right, but the stock price has been volatile in between. Okay, Google, same thing, revenue up and to the right, lots of jumps and ups and downs with the stock price. Microsoft, same deal, sales, revenue from bottom left up and to the right. Stock price has been all over the place, and it looks, way up there right now compared to its historical sales growth rate. TransDigm, sales up and to the right, stock price very volatile. And so the point is let's remember we are investing in businesses. I am investing for the long term, and I'm not running away from the market. I'm not getting scared. I don't know when the bottom is. I don't know if we're going to go down another 10%. I don't know if the stocks I own are going to go down more. But I think in 3 to 5 years, I'm going to be happy that I didn't sell right now and I kept investing. If you like this video and you like this content and you're on this long-term investing journey with me, if you go ahead and like the video and subscribe to the channel, it really helps out with the algorithm that will help more people find these videos and this channel and hopefully become long-term investors. And it just really helps me grow the channel. Another way you can support me if you want to, I have put my account on Savvy Trader where people can sign up and you can get email and text SMS alerts anytime I make a transaction. I'll put that link down in the description below. I hope you have a nice weekend. Spend some time with your family. Get away from the markets, get away from stocks. And remember why you invest. You invest to complement your life, not to consume your life. All right, have a great weekend.